Shrikant also has dropped off, so let's wait for both of them to join. Thank you. She's actually out, she told me. Just a minute. Huh? Hi, Shrikant. Shrikant, am I audible to you? Himadri, am I audible to you?
Yes, yes. You're
Yes, yes.
I have been facing technical issues on my end as well, so I'm confirming again and again. Hiral is trying to join back. She'll be there with us in a few minutes. Okay, so my question last time in the last session was about retail. It was about jewelry retail and grocery retail. So uh, uh, the question that I asked was uh, while the gross margin of jewelry retail is lower compared to run of the mill retail. Hi, Shrikant.
hello, hello. I think I have some network issues, but I think it is fine right now, right? Uh,
No
I
problem.
hope you are also audible. I'm
Yeah,
audible.
yeah, you're audible. So could you just give us a quick update of the companies that you've completed and if you have any challenges that you're facing?
It's 25, Shreya. I could not able to manage the
No problem. No
remaining.
problem. 25 is a good number. Thank you so much for that. Any challenges that you're facing regarding understanding of anything, or you're okay till now in terms of understanding things? In case you're unable to come off mute and speak, you can just type in your answer. That is also fine. Okay. So the question that we were trying to answer last time was that grocery retail or run of the mill general retail has a higher gross margin, while okay, thank you. Uh, while the jewelry retail has a lower gross margin, yet jewelry retail earns more money is the perception that we have, which is true in some way. Why is that so? The operating cost structure of both the businesses are same since they are in the retail business, so it remains in single digits as a percentage of sale operating cost. Whereas for jewelry retail, you've got lower gross margin, and the general retail, you've got higher gross margin. Why is it still that jewelry retail ends up making more money in terms of value, not in terms of ratios? So that was the question. Anybody who would like to attempt that? Yeah, please go on. Yes, Iman.
Uh, so I didn't get through think about this question before, but based on what I'm trying to understand, so I think from overall from a profit perspective, you're saying the jewelry is going to get more profits, although the gross margin is lesser. I think it
Correct.
is to do more with maybe the demand that or the turnaround time that you can do, like how many. It's about the volume, right? I mean, if the volume is more, obviously your profit is more, even though the gross margin is lesser. But in a mill kind of thing where your your volume is low, so even though the margin is higher, your profit is still low, right?
Okay. So which one you're saying has higher volume, lower margin? So
You
are
said
you talking?
this is retail versus jewelry, or you
No,
said
no.
some
I'm
mill
talking about jewelry. I'm talking about retail in general for jewelry and general retail.
or
Why?
general?
My question was not what you understood. Maybe you misunderstood it. My question was for the same retail business. If it is jewelry retail, the gross margin is lower, whereas the absolute profit is higher, absolute number of profit is higher compared to general retail, where the gross margin is higher, but the absolute number that you get at the bottom is relatively lower. Why would that happen? Was my question.
The absolute number in jewelry is lower, you mean?
Is higher.
Is higher, right? Yeah. Okay. Yeah. So I think it is. I mean, it is largely due to the factor of if you look at uh, the transactions, and if you look at the average price of all your general retail. For example, you are selling say 1,000 items, and your average price of that, and selling that quantity, and what says the average price of in jewelry and the quantity that you sell. I think the average per product price is much higher in jewelry. So obviously, even though the profit margin is lesser, but multiplied by that with a bigger average price will give you more profit in terms of number. Still, the total volume as a percentage, it still will be lesser, but absolute number will be more.
Absolutely correct. And that is why I keep telling you, imagine what if you applied this brilliance to practice. You would
Yeah,
do wonders. So do it. Good job. Good understanding. Both of you, do you agree with that, guys? Did you get his answer?
Yes, yes, yes. As it's a
Cool.
retail, we can say it's an turnover business.
Sorry, retail is a turnover business.
Turnover
Absolutely.
business.
Yeah, yeah. Retail is a total turnover business. And hence operating cost to sale is the most important metric to focus on. You keep your costs low, fixed cost low, right? Emadri runs a retail chain and he can tell you how important that is. Okay, cool. I think Hiral is still having a problem joining. I would have wanted her to be here. See if she has messaged. Uh, okay,
we
she's
can
asked.
talk. Maybe want to give some more time. We can talk about some more maybe
Yeah,
general questions. This, if you
yeah.
can.
We'll do that. We'll do that. I have a lot of general stuff to talk about, guys. Okay, so she's asking me for the link. I'll just share it. Give me a minute, okay? Uh, how do I transfer the link? Does anyone have the link in on WhatsApp? The link to join this particular session on WhatsApp, the URL. If you have, please forward it to me. Yeah,
I
thank you. Madhu. It's really helpful of you. Just yeah, I've just sent it. I don't have this ID active on my phone, so yeah. Okay.
So
So,
I had a follow-up question
yes.
on the same thing, which always um, obviously when we look at uh, investing in different businesses.
Mhm.
So the first thing is like, I mean, to make the business the profit ratio, it is always dependent on the investment, right? At the end, like whatever the investment going into the working capital as well as the invested capital, or the what is it called, like the capex.
Mhm.
So at the end, your returns should be based on the total investment that goes through, right? Like for
Absolutely.
example, if you take these two examples of jewelry and say retail, so I mean, because sometimes, like, your retail might give more percentage in terms of profit compared to a jewelry. Jewelry gives lesser in terms of profit ratio, but uh, the the final value what you get should be equated to the amount of investment that you put in, right? So it's not the
Absolutely.
percentage that actually matters. It is the overall investment that you put in. And versus, like, the reason why I'm asking this is because, even in my daily encounter, I always see that, like, for example, if I want to make more profit, I have to invest more to make the business more profitable. But that's not the idea, right? If you invest more, then your return should be according to the proportionate to the investment. Like, for example, if I'm making margin of, say, 5% in a business, if I want to increase this to 9%, but I have to increase my capital maybe 200%. So it's not viable to go and make more profit by investing more in that, right?
Okay. So your question is more to do with uh, direct investing in a business or a company, and we'll come to that. Just hold on to that question. We'll discuss this separately. Right now, let's get on with the session. We'll come back to this question for sure. Okay, Madhuri?
Sure, sure.
Okay. Hiral, I hope you can hear us. In case you're unable to come off mute and chat, you can just use the chat function.
Yes.
अभी भी बोल सकते हो आप, कोई दिक्कत नहीं है.
नहीं, अभी सुनाई दे रहा है, मैंने दूसरे से कनेक्ट किया है. हाँ.
ठीक, fair
Right.
enough. So अभी हम आप ही का क्वेश्चन डिस्कस कर रहे थे, which is to do with ज्वेलरी बिजनेस में ग्रॉस मार्जिन कम होता है, ज्वेलरी रिटेल में ग्रॉस मार्जिन कम होता है जनरल रिटेल से, फिर भी उसका एब्सोल्यूट नंबर बड़ा होता है प्रॉफिट के टर्म्स में. क्यों? ये क्वेश्चन था, याद है?
हाँ,
तो
क्वेश्चन तो
आपने
याद
उसका
है.
आंसर सोचा है?
मैंने तभी वो जो आपको भेजे थे वही दो चार ऑप्शन सोचे थे, फिर आपने मुझे एक हिंट भी दिया था. सो
Okay.
उसके ऊपर
तो
मुझे सोचने का एक्चुअली इतना टाइम मिला नहीं.
कोई बात नहीं. सो
मैं
हिमाद्री ने उसका
आगे
आंसर
लिख रहा था.
बताया है. आई वुड
हाँ.
रिक्वेस्ट हिमाद्री टू कम ऑफ म्यूट एंड टेल द आंसर टू हियर.
यस प्लीज.
हिमाद्री, प्लीज गो अहेड. ओवर टू यू.
Yeah, sorry. Yeah. So I was just trying to think. So the answer is more towards like the average price of, I mean, if you look at the retail, in the retail, so you have many items that you are selling. So what we need to look at is the average price of all the items that you're selling, uh, multiplied by your profit, average profit. So compare that with the average price of all the items that you're selling in jewelry, and uh, you see the profit that you're making. So basically, it is the volume that actually makes. So if you multiply this average price with the quantity that you are selling versus the average price in your retail, multiplied by the quantity that you're selling, so the net result will give you more profit here in jewelry, because your average price is way higher, even though you have less quantity that you're selling. Whereas here, your average price is lesser and the quantity is more. So that's why jewelry will make more profit in absolute number, but less in the margins. Whereas retail may be higher in margins, but less in absolute number.
Yes, I
Thank you.
agree.
Okay,
Yes.
great. समझ में आया, right?
Yes, yes, yes.
Perfect. Okay, so Shrikant has dropped off, so we'll wait for him to join. Uh, in the meantime, Himadri had asked a question. I'll try to answer that till Shrikant joins. Okay, if he joins early, we'll chuck that and we'll move with the session. I'll get back to your question later, Himadri.
Should I just
Okay.
on this retail and jewelry business? So markets will give valuation for the margins and growth rather than absolute value, right?
Yeah.
At the,
Pranay, market is an animal, is a whimsical animal. Don't go by what and how he thinks. Okay.
okay.
So you go by how you will value it. Forget how the market will value it. Jewelry retail and general retail are retail businesses. आप साग सब्जी बेच रहे हो या साबुन तेल बेच रहे हो या रेगुलर वॉचेस बेच रहे हो या ज्वेलरी बेच रहे हो या लग्जरी वॉचेस बेच रहे हो, all these businesses are nothing but at the end of it retail. बस साग सब्जी आप क्या बोलते हैं मंडी से बेचते हो, साबुन तेल आप एक किराना की दुकान से बेचते हो या डीमार्ट से बेचते हो, एक स्टैंडर्ड वॉच आप टाइटन के शोरूम से बेचते हो, आप ज्वेलरी एक हाई एंड फोकस लाइट्स लगे हुए अच्छा इंटीरियर किए हुए शोरूम से बेचते हो, लग्जरी वॉचेस उसी टाइप के शोरूम से बेचते हो. End of it, if you see through everything, it is just retail. Do you agree with me? Do you agree it's all retail? Yeah. So retail is retail. Okay. The nature of the thing that they are selling will determine what kind of other variables could impact it. Irrespective of what retail you do, you have to keep your operating cost low. You have to do a high volume business. The quantum of your volume would depend on the nature of business you are in. Say, if you are a stockbroker, you have to do a lot of volume. If you are probably a diamond trader, you can do lesser volume and still make money, right? So
Yes.
the equation alone would vary. Don't go by how the market will price it. Market is a collective animal. It is not uh, uh, an existing or defined biological creature that thinks. Okay, so don't go by how the collective is going to judge things.
Yes.
Does that answer your question, or you
Yes.
still have that why
No,
market
no,
will
no,
give what?
no, no. Just
So
got it.
so strip everything apart and just look through, see through the facade and call it, okay, this is what it is. Okay. End of the day, a broker is a broker, whether he's a broker of cycles or he's a broker of land or he's a broker of aeroplanes. A broker is a broker. Never forget that in life. That's how you understand different business models, right? How much ever SEBI or any stock uh, market institution starts calling a broker trading member does not mean that वो दल्ला ट्रेडिंग मेंबर बन जाता है. एंड ऑफ द डे वो ब्रोकर ही रहता है, राइट? ही इज गोइंग टू अर्न आउट ऑफ कमीशंस. So don't forget basic business constructs. Our whole purpose of this program is to understand basic business constructs and see through different things and not worry about, yes, incentive bias. Absolutely. You should never take advice from a bloody barber. A barber will always, whenever you ask a barber, do I need a haircut? What do you think he's going to tell you? Even if I ask, what do you think he's going to tell me? He's going to say, yes, go take it. Why? Because he's going to earn out of it. How many barbers will tell me that no, you don't need a haircut? They'll say, yes, you need a haircut because they're going to earn money out of it. Never trust such people with their judgment because their incentive is misaligned. That's human behavior 101. Thank you, Shrikant, for bringing that up. Okay, I think we have spent
I,
enough
I
time
just
on.
Yeah,
Yes,
I
please.
just wanted to just conclude one quick thing. So you're saying that when you are trying to, I mean, in this context, so you're saying if it is like retail, so as an example, so it doesn't matter what kind of retail is, like you can you can you can compare them and see which one is best, as long as the it's a the business concept is same, like what you like. Trading is a trading irrespective of what you're trading. Retail is a retail
Absolutely.
irrespective of whatever you're retailing.
See, some variables, some ratios will be different for different kinds of retail. But don't you think operating cost to sale matters as much to you as a general retailer as it matters to a jewelry retailer? Do you think he's going to give his salesman 100% hike on fixed pay? He won't, right?
Yeah, I think the principles of business in that segment will still be same. It's only the proportion of, or the margins, or the those things might vary.
Correct.
So you can compare always to within the same business centric, as long as it's the same funda. So you can compare across different things. It's not like if it is retail to a specific category, then only compare that with the peer is not a right comparison, is what you're saying, right? You if you
I'm
say
not
retail,
saying it's not. I'm not saying it's not a right comparison. How many times you will get that comparison?
Hmm,
You will not have data. See,
right,
in a world where we are so obsessed with comparing things which are exactly like each other, it won't work. You will not be able to get that data. You will be too scientific and you won't be able to come to any conclusion. I've seen a lot of intelligent people fail miserably in investing simply because they think too much. Boss,
right,
thinking is good. Thinking in higher order is great. But just saying that, for example, they'll look at a political scenario and they'll say, this government is not doing this government is not doing that, uh, this prime minister is not good, this chief minister is not good, this finance minister is not good. Boss, yes, everything is not good and everything is good in shades of gray, but you got to accept and move on in life. You got to make decisions, because
right,
while they are ruling, you will have to earn your living, right? You can't keep saying no, no, this is not good, that is not good, and so I'll keep being a rebel and an intellectual. An intellectual never earns money.
right, right,
For a
right.
reason they are called intellectual. Uh, they don't go anywhere in life.
Yeah,
They
I
remain
think that,
miserable in their life.
yeah,
They have the best of the intelligence in the world and the least of the wisdom. That's why you should never argue with a PhD. I
right,
mean,
yeah,
that's a general rule. I'm not saying all PhDs would be like that, but in general, you would have them make amazing arguments. But when you ask them how much have you invested and how much return have you generated, you'll find them doing sunnah.
hmm.
I'll
Yeah,
not
it's like
name. Yeah, please go on. Sorry.
it's like more of like you're more deeper, but at the same like most of intellectuals, maybe they are more deeper but not wider. So you have to balance out when you go deep, come back
Exactly.
and look at wide.
Exactly. See, if you take a step back, I know this might sound a little controversial, but the principles of investing and the principles of flirting are the same.
Right,
Trust
right,
me, they are the
right,
same. Now, a lot of people would say, "Are you absurd in comparing all that, boss? I have got all the free time in the world, and I'm doing all that, and I'm looking at different aspects, and I'm comparing. And if I learn a thing or two by comparing two things, what's wrong in that?" Investing is not about being master of everything, but jack of everything. You should read a book called Range if you have the time. Uh, Shrikant, I think you would have read it. It's one of the very good books that I've read. Range, Range. It has a bunch of keys on the picture. It's one of the best books I've read. It says that, generalist in general beat specialists hands down in life, because it's not about how deep your skill set is. You should read it, Srikant. You would love it. You would love it. It's an amazing book. I would recommend it to anyone and everyone. You should read it. Audible पे भी मिलेगी, आप सुनो. I तो listen. So yeah, you can do that.
It's just called Range, Range, right?
Yes, yes. RANGE, range.
Yeah, sure.
Okay. Okay, guys. Let's go ahead and get into the session. Tell me if I've covered these topics. Okay. I could not find this in the presentation, so I could be repeating this. We'll go ahead and understand risk and return. Have we covered risk and return holistically yet? Hiral, Pranay,
No, no,
Himadri, Shrikant? No, right?
no,
Yes, no?
no.
No.
Okay, cool. Thank you. So let's understand risk and return formally as investors. Okay. So whenever you are trying to make investment decision, or for that matter, any decision in life, if you are looking at only the rosy side of things, boss, you are making a fool out of yourself. Whenever you're looking at upside, you should also look at the downside of something. You should not always look at downside or upside. You should look at both always. Same principle applies in investing. Investing is a sub branch of decision making that we do in daily life. If I have it my way, one day I will have an institute, run an institute which will be on decision making. And decision making is the greatest skill to learn in life. Okay. And this is the basic 101 of decision making, is never to look at only the positive or only the negative side of things. You have to look at both in tandem together. Only then you will be able to become a better decision maker over a period in time. You might not ever become the best. It's always a process in the making. So always aim for that, but do not get disheartened if you're not getting there. You always have to improve as a decision maker. Okay. Whether you're playing poker, chess, cricket, uh, you're working, you are cooking, you are marrying, you're flirting, you are uh, choosing a school for your kids, you are choosing a life partner for your kids, or helping them choose one. It's all about decision making. That's the thing to learn. Okay. And in decision making, there are two parts: risk and return. Okay, which here is being called reward. So you always need to ask yourself, what is the reward per unit risk in this situation? Now, you need not take it literally and try to measure everything in the world. I'm not asking you to do that. Risk per se cannot be measured. A lot of people go ahead and create courses on that, and there are designations on that, and they are employed based on those designations. uh, and those ideas could be applicable in certain dimensions, but they do not apply so strictly in the financial markets or in the world of business, which is ruled by uncertainty, not by certain measurements. So wherever there is predominance of uncertainty, you cannot measure risk. All you can do is have a feel of it, understand it as a concept. You won't be able to touch, feel it, or see a number. So don't get into that fallacy. But you should always ask in every situation, what is the reward per unit risk in this situation? Is the reward to risk favorable for me to bet on or not? Okay. So suppose you're playing cricket. Okay. You get a full toss, a low full toss, and you're going to hit it towards the leg side. And there is a deep mid on. Mid on is the best swing that any batsman would have, okay, in cricket, which is on the leg side. So you have a square leg, you have a mid on, you have a long on, and the offside field is completely open. and the ball is coming in a way that you can only hit it towards the leg side. It's a juicy full toss which you can hit for six. Should you be hitting or not? You're not in the final overs. You don't have to win a match. Should you take that risk, or the risk reward is not in your favor? What do you think, guys? Yes or no?
Yeah.
That's all.
No,
Okay,
I think
you've
I
given your
think
answer.
I think we if we are on the field for if we have faced 50, 60 balls and we have set on the field, then we can take that risk, I think.
Okay,
And if we
fair.
are new onto the field, I think we should not take.
Cool. Thank you for your answer. Any other answers, Hiral, Srikant? I know cricket might not be the best thing for all of you, but I've just
हाँ मुझे क्रिकेट ही नहीं समझ आ रही है तो
okay, कोई बात नहीं. So basically बाउंड्री लाइन पे फील्डर है और जिस डायरेक्शन पे बाउंड्री लाइन पे फील्डर है वहीं आपको छक्का मारना है. बॉल वैसी मिल रही है आपको. क्या आप मारोगे नहीं मारोगे? हाँ या
रिस्क है उसमें कैच होने का तो मैं
हाँ.
सोचूंगी मारने के लिए वैसा ही नहीं मारूंगी
Correct. Okay, fair enough. Srikant, any thoughts? You can type in, let us know. So even Pranay's answer or Himadri's answer of no, yes, whatever it was because you thought about, okay, if I hit, I get 6 runs. If I miss hit, I could be out, right? That's why Pranay said 60 balls face किया है तब करेगा मैं और नया है तो नहीं करेगा मैं. And Himadri said no, I won't do it. I'm not saying the answer is correct or incorrect. That it's about the process of thinking is what I'm talking about. I hope you are getting me.
Yeah.
Cool.
So
So
the answer for me, the reason for no is like if there is a risk of getting out, I would, even though it is a full toss, I try to hit for a 2 or a 4, which has less risk, but I still get at least some reward.
exactly. So that's another answer. And that's the exact philosophy which Rahul Dravid followed all his life. Wasn't he successful? He's the best man to look at how to bat, thinking of risk and reward together. Sachin was another batsman who did it, but he was beyond normal cricketers. So I would not say you should go by Sachin's example. But Rahul Dravid was very much a mortal who did it with sheer method, right?
Yeah.
Okay, cool. So every situation you are in, even when you are about to blast on someone, you should ask yourself, is this going to be beneficial or detrimental for me? Overall, together, yes, there'll be some detriment, there'll be some benefit. Put together, that situation is going to be beneficial or not. If it is not, you must keep quiet. Okay, cool. Moving on, food for thought. Is investment analysis more about risk management or reward management? A is risk management, B is reward management. Please type in your answers. Thank you, Shrikant.
I think risk management.
Absolutely. Okay,
Yes.
right. So we are in the business of risk management, and hence we have a questionnaire. We are doing bloody so much of analysis. Each of you have covered at least 25 companies. Why the hell did you do all that? That's because you want to see whether there is something wrong or not. See, investing is a business where you don't catch the nose straight, or you don't say this is black. You try to prove that this is not white. Or if you want to say this is good, you try to prove this is not bad. It's a inverted science. Do you get the meaning of inversion here? आपको अगर प्रूव करना है कि ये चीज अच्छी है तो आप ये रूल आउट करते हो कि ये चीज गंदी नहीं है. अगर गंदी नहीं है तो अच्छी है. क्लियर गाइस? Okay, fair enough. So what is fundamental analysis This is the textbook definition which reads something, you can read it. The actual definition, which I would say, is it is an analysis that involves identifying the key variables that impact the actual business to ascertain the value of the business by studying their impact. It is the analysis that involves identifying the key variables that impact the actual business to ascertain the value of the business by studying their impact. Okay. The key here being key variables. Okay. So now tell me, if you're playing cricket, okay, Hiral, again, sorry for this. Let's get cricket out and let's talk about some other thing. Hiral, which game you are comfortable with? Bad in sports. Okay, fair enough. कोई बात नहीं. Let's say, uh, ठीक है. I will give a business example only. Okay. Suppose you are in the shrimp business. Shrimp matlab chingdi. You know what shrimp is, right? Uh, it's a,
Prawns, right? Prawns.
yeah, prawns business. Okay. Suppose you are in the prawns business. Is that more predictable compared to a biscuit business or not? Which one is more predictable, prawn or biscuit? Please give your answers in the chat function. Which has less number of variables governing the business? Selling prawns or selling biscuits? Okay. Thank you, Srikant. What about others? What do you think? Himadri, chat function, please. Okay. Pranay, what do you think? Okay. Okay. Can someone explain why it's not prawn? Hiral, would you like to attempt? Pranay, would you like to attempt? Why not prawn? Shrikant, you want to attempt? Okay. Yes, absolutely. That's the higher level reason, but I'll tell you in a simpler way. Okay, that's not predictable. Absolutely. So if I were to do it in a mechanical way, in biscuit, your sale price is fixed. Your cost price, your variable cost also is sort of pegged because you have kind of made future or forward contracts with farmers to lock in a price of wheat, palm oil, blah, blah, sugar and all. Okay. So you are operating in a relatively predictable range. Even if you don't have forward contracts, you have one side of the business that has fixed number, which is the output, the finished product. Whereas in case of shrimp, from farmer you could have contracts, but forward you could have contracts, but both cases you can't have very long-term contracts. So both cases are variable. Plus, since it's a living thing, anything could impact shrimp that you have or you're procuring. And it's an animal and any disease could impact it. So the supply could vary, the quantum of supply could vary, the farm gate supply could vary, the prices could vary. So there are many variables that are playing out. Are you getting this, Himadri?
Yes, yes. Now I agree.
So the number of variables that are there, do you think a business is good if it has more variables that are impacting it? Sorry, I reframe my question. Is a business more predictable if there are more variables impacting the business, or is it more predictable if there are less variables impacting the business? Please answer more or less in the chat function. Absolutely. Okay. Okay. What do you think, Hiral, Pranay? Hiral, Pranay, what about you? Okay. Are we clear about this? Good. So always remember, irrespective of how many thousands of businesses you have, do not go and try to study every business. That's why if you give me 6,000 businesses, I'll look at only 100. Why? Because I think there are way lesser number of variables that would be impacting that business. A lot of people will come and tell me, Arey, that is going great, that is amazing. Boss, but I can't predict it. Why should I play? Why would I want to play a Jimmy Anderson kind of a bowler instead of an Umesh Yadav sort of a bowler? सो सिंपल वर्ड्स में मैं बोलना चाहूँ तो जिमी एंडरसन की बॉल ना ऐसे ऐसे मूव भी करती है और तेज भी आती है, और उमेश यादव की बॉल सीधी आती है, तो मैं सीधे वालों को खेलूंगा ना, मूवमेंट कम है, एक वेरिएबल कम है, राइट? तो that's the whole and soul of investing. Okay, this kind of variable kind of definition of fundamental analysis not from any book, it is out of my experience that I'm telling you. And I think irrespective of what people say, you should do management analysis, business analysis, uh, financial analysis, valuation, this that, ultimately it boils down to कितने variable business को impact डाल रहे हैं. Okay, अगर मान लो आप एक ऐसे business में हो, ये सिमाद्री.
Yeah, I'm just rethinking on this from a different direction. I know in general less variables is definitely more predictable, but are we not measuring the impact of a variable? The reason I'm asking is, for example, if you think from a realistic opportunity point of view, let's say you get a shrimp where most of factors like whatever all the variables are much more favorable because all those are evaluated versus a biscuit which we don't know, like let's say I don't have information whether this is a good brand, whether this is regulated or certificate, like
Oh,
it's the same thing.
for
Sometimes I
that
give
that
information
is
how.
lack of research that you're talking about. Okay, so for that
Hmm.
you should do more research. Okay, now I'll tell you one story before we move on. Have you completed your question, or did I interrupt you in between?
Yeah. So what is the right way? Like, obviously you cannot find information, so which
Okay.
means how to make a decision on this kind.
A few Nobel laureates had opened a firm called Long Term Capital Management. You know, this was some 25 years ago, probably 27 years ago or 30 years ago. And they, using their brilliant uh, Nobel Prize winning brains, went ahead and bet on the bond market and disparity between the prices of bonds across the globe. You know how you said, that certain things are predictable in shrimp business. I know for sure. That's how they did. I know for sure. And they didn't factor in any government going bankrupt. Russia defaulted and that company had to go bankrupt. So a lot of people, a lot of smart people learn it the hard way that if you just stick to basics, you will be better off than try to pull off miracles. Okay. You can try to pull off miracles in R&D labs. It's good, but as an investor, I would never recommend you to do anything of that sort. Okay. Yes,
Yeah.
that's possible. A lot of people will tell you you should do it, you can do it, and for the thrill of it, they get into venture capital investing and they become angel investors, and then they have a pathetic time in life. You should not do that. A lot of people will come back and come to you. You come to India. You I come across all these startup folks who come to me and tell me, why don't you invest in our business? I said, initially I told them, see, money to I'm not giving you. Forget it. Not even a single paisa I'll give you. Okay. I'll be generous with my time and I'll take a share of the business in return, be it 0.25% or 0.5%. I worked with them. Most of their mindset is not about building a long term advantage in a business or generating sales to generate profits. They just want to generate uh, or run a business so that they can get funding and they can live a lavish lifestyle and have a social uh, gaga about it. See, that's all good for fun and adrenaline, but it is, yes, sell the topi to another bandar is, is the term that I use. So uh, that that's all nice for adventure. If you are a rich spoiled brat who wants to do that, you can go ahead and do that, and people do that. But you, sooner or later, all that number, all that valuation will multiply to one digit, and it will all come to zero. It will be zero. Multiplication by zero. Why? Because you're trusting someone who inherently is not having the right incentive, like Srikant mentioned some time ago. Okay. Do we agree on this now? That we should focus on predictable stuff and not try to pull off, MS Dhoni kind of chakka wala thing. That is all good in cricket. Let it be there. Let him play his dramatics there. But you don't try to do it in investing. If it happens, consider yourself lucky. Never confuse, never confuse luck with brain. A lot of people make this mistake of confusing luck with brain. Be very clear when you have been lucky and when you have been brainy. Okay. You will find yourself that you will be more lucky than brainy, and be humble enough to accept that. Intelligent people fail in life simply because they're not humble.
Well,
Yes, Emad. Okay.
yeah.
Cool. So, fundamental analysis, what are the dimensions of business that you should analyze from a holistic perspective of business? I would have asked you this question, but I think we have discussed this before. Dimensions of business to analyze are, yes, Shrikant.
Yeah, I just want to add one more point to Hemada's question, right? See, why can't we have more variables, right? One thing is, see, for fundamental analysis, right? As I understand, the important point is to determine the intrinsic value. Okay, so the intrinsic value, if you want to determine, we are doing some assumptions, right? Based on assumptions only, we'll come to intrinsic value. So the more assumptions we make, the more we go wrong. So
Absolutely.
that means the more assumptions means more variables. So that's the point here.
Exactly. That's another wonderful way to explain it. Thank you for that. Okay.
Yeah.
So
Thank
we studied number analysis. We completed number analysis, guys. Yes or no? भाई 25-25 कंपनी करके मजा नहीं आया लगता तुम लोग को 50 कंपनी करके. Okay. So number analysis we have done. We will now look at business analysis and then we'll go to management analysis. Because no matter how good the business is, the people running the business are really important. Okay. And uh, to a great business, a stupid manager cannot do much damage, but a crooked guy can screw up the business, right? If you take, for example, Mr. Vijay Malia, who had an amazing liquor business. He had a liquor monopoly when it came to beer, didn't he?
Yes, he
Kingfisher
had it.
was the number one beer. And what did he do with that? He took money out of the great liquor business and put it in the
Thanks.
pathetic airline business. And what happened to him after that is history. Okay. So a crooked person or a, a person who is disillusioned can always spoil even the best business. Though his business didn't get spoiled, it got sold, but the original shareholders, minority shareholders suffered, right? So we'll get into that part. Okay, coming to risk. What is risk? So market practitioners define risk as volatility. This is the degree of rise and fall in price. They do so because it is measurable. What do you think is risk, guys? What is risk in general? Not just in investing. In general, what is your definition of risk? Don't take a long time to explain it. Keep it short and sweet. And if you can explain it, great.
Something that fails
Okay.
is,
Something that fails is risk. Okay.
or the chance of failure is the risk.
The chance of failure is risk. Fair enough. Thank you.
The situation might goes against us.
Right. Okay. Thank you. Any other definition, anyone? Not known situation. Okay. Fair enough. Hiral, what do you think? Okay. If we say the chance of failure is yes, uh, an unknown situation can be risk. Uh, if we take chance of failure to be risk, it means the chance that something can go wrong, if I could put it that way. But here, market practitioners are defining risk as the degree of rise and fall in prices. How can rise in prices be risk? It should not be risk, right? It should be fall in prices. And you can't measure that for sure. How can you predict by how much something will fall based on the chance of something going wrong? Can you? Yes or no? Can you predict by how much price would fall based on the chance of something going wrong? Can you predict it with razor sharp accuracy?
No,
Even with the torchlight sort of accuracy? Can you? No,
no.
you can't. You should have the humility to accept that part. Okay. Okay. Is that true risk? Is that true definition of risk? Not everything that can be counted counts, and not everything that counts should be counted. Now, some people, especially who consider themselves intellectual, have this fallacy of thinking that anything that can be measured is better than anything that cannot be measured. Any of you who has this particular bias in any way, this is the time to get it out of your head, dust it, and burn it. Do you agree with this? That not everything that's countable should be counted. If you just keep adding, if you just keep adding numbers behind a car, do you think, and you keep doing that, do you think it is going to make you rich or do anything else? Just because it is measurable, you are just adding up all the numbers. You could do it for fun to improve your maths. All that is good, but does it produce any productive result then and there? Just because you can add them, should you add them? Okay, thank you, Hiral. What about others?
Yeah, I think from a measure point of view, uh, I mean, I had the similar experience on when we are building the startup. When we want to measure a person's performance, everybody comes up with so many things that you can measure, but not all metrics make sense. Like, for example, how many lines of code somebody is written, you can measure that, but it's of doesn't signify, because it doesn't tell, okay, somebody can write simple things 100 lines and they can give you a different metric. So I mean, I was always against, like, sometimes from a management perspective or somebody, like, they look at things that they can measure and tell, but in reality things are different. So I was always trying to put, like, measure what you should measure and what makes sense, not measure
Correct.
everything, which
Correct.
just not the purpose.
That's something that you should remember in your life. Okay, whenever you're doing anything in life. Okay, now coming to risk. What is the dictionary definition of risk? A possibility of something dangerous or unpleasant happening, like you guys said. A situation that could be dangerous or have bad result. Srikant, even unknown things. So you spoke about, I think you spoke about not known situation. Okay, not known situation could be a blessing also. Only a situation that is dangerous, you should be explicit about it. Only what is detrimental is risk, or chance of being detrimental significantly, or chance of being detrimental is what is risk, not the upside. You know, in in my life or in your life, wherever you are today, it's all because of unknown chances that happen to you, or unknown situations that happen to you, that gave you leap into things that you didn't think of. Would you agree to this?
Yes, yes, I agree. That should be defined, the statement.
Right. So what I'm trying to tell you, I'm not trying to correct you here. What I'm trying to tell you is always be open to positive uncertainty. Okay? Put yourself out there in the world for positive uncertainty. If I've, say, for example, right now I've written a book that I'm trying to promote. I I mean, what will happen, what won't happen, I don't know. But I'm trying to put it at a place where it has the highest possibility of going up. If it doesn't work, all that money is gone. But at least I'm giving it a push, a chance. So be open to the positive chances in life. Take a chance. Is is what Irfan Khan said in uh, Zindagi Na Milegi. No, what was that? Life in a Metro. So you should always be open to positive chances in life. Uh, one of I had once met a great investor who was kind enough to sit with me for a day and mentor me on things. He gave me an invaluable advice. He said, Shrey, whenever you're traveling, try to travel business class, or whenever you have time, go have lunch in a five-star restaurant or stay in a five-star hotel. Not because you want to show off, but because you could chance upon meeting someone who could change the trajectory of your life. It could happen by chance, right? It's the old way of doing things which still works, even in the social media frenzy world. Would you agree to that?
Yes.
So take that chance. Okay. And risk is possibility of anything going gravely wrong. Not risk is not anything going amazingly high. Boss, we make 100 baggers, 1,000 backers only because of volatility, and we should put our hands together to it and say, oh, thank you for this. And it happens within if you look at 100 bagger or 1,000 bagger that you have made, or even 10 bagger that you have made, do you think the return is distributed like, okay, 10% came here, 10% after that, 10% came here, after that 10% came here, or 90% of it came within a 15-day period that was spread across different days? Anyone would like to tell about this? Or whatever positive happened in your life, did it happen in a linear manner or in random manner? One day you were all of a sudden picked up and all of a sudden you had to fall. You had to take a fall. Whatever happens never happens in a linear way is what I'm saying. Okay. So be open to the positive side, but not the negative side. Curtail the negative side. You can't control it, but you can build risk management tools. Okay. Does that make sense? We hope it does. Let's refine the definition to the context of investing. The chance of permanent loss of capital is risk. What is risk? Your capital being wiped out completely. The chance of that is risk. Okay, when you are investing 100 rupees in a share or in a business as a minority shareholder, how much is the maximum you can lose? Can you lose more than 100? Can you lose more than 100? I'm talking about minority shareholder. I'm not talking about majority shareholder or anything of that sort. Can you lose more than 100 if you put 100 rupees? No, you can't.
No.
Right? So theoretically, that's the maximum possible loss. Now, practically, you got to assess what is the permanent loss of capital that can happen. Would it be 25%, 50%, 80%, 100%? Okay. So at least you have the theoretical number in your head. ज़्यादा से ज़्यादा क्या होगा? पूरा 100 रुपया उड़ जाएगा. Okay. And you should be ready with that. That situation can come sometime in life. Be open to that. You should not sell that point at that point in time, or else you would be the greatest fool on this planet, because you got a notional loss and you made it material by booking it. Yeah. If there has been malpractice that has happened in the company and you know for sure that this thing is not trustworthy anymore, that's a separate issue. But if it's just a market sentiment or pandemic or a bombing incident or a war incident, that's not the time to sell. The worst time to sell is when it feels like you have to sell. Please mark my words, the worst time to sell or the worst time to leave something in investing is when it feels the worst time, mostly. If it is because of genuine reasons, which is probably 10% of the times, yes, you have your reasons. If it is not genuine reasons, if it is driven by market sentiments, herd behavior, some event happening, that's the worst time to sell and make your notional loss permanent loss. Okay. Okay. How does permanent loss of capital look? The permanent loss of capital looks like the chance that the return that you have generated does not even beat inflation. The chance that the management does not share reward generated from the business with minority shareholders. The management of the business, if they are trying to siphon off money at the expense of the minority shareholder, that is a chance of permanent loss of capital. The chance that the management would benefit unfairly at the expense of minority shareholders. It's self-explanatory. मतलब माइनॉरिटी शेयरहोल्डर का एडवांटेज लेके मेजॉरिटी शेयरहोल्डर निकल जाए. Okay. The chance that management makes terrible acquisition or mergers. किसी दूसरी कंपनी को खरीद ले जो pathetic turnout हो. The chance that product or service of a company becomes obsolete. मतलब जो प्रोडक्ट वो बना रही थी वो उड़ जाए, वो गायब हो जाए. For example, cassettes. The chance that, and the company doesn't do anything in the interim. The chance that active shareholders make the life of business miserable. Okay, there are situations where shareholder activism can ruin the life of a business. Okay, they are forcing the business to do something that is beneficial to that certain group of shareholders. Okay, which could be related to an unrelated situation to other shareholders. The chance that a competitor wipes off the company's business. For example, Coca-Cola wiping off Gold Spot. Do you remember this? Does anyone remember Gold Spot? Anyone remembers Gold Spot? Yes. You know what happened? It was wiped
I
out
think
completely.
Coke bought, I guess. That's what happened.
They didn't even buy. They they broke all the bottles and they booked the bottling plant uh, across the country for 6 months.
Mhm.
There was no way Gold Spot could come back. Coke bought Thumbs Up.
Right, right. They bought Thompson, right?
Right. Okay. The chance that a company is unable to pay off its borrowings, that's another dangerous thing. One simple way a lot of brilliant people go broke is by borrowing a lot of money. Because any number multiplied by one number called zero produces a result zero. And borrowing has the power to get you to that situation. Okay. Why do I keep telling people that you should not invest in whole life insurance? Because it doesn't even beat inflation and hence permanent loss of capital. Do you agree to this? LIC keeps selling whole life insurance policies. Does it even give returns up to inflation, or your bank FD, does it even give return up to inflation after taxation? No, right? Correct. The chance that management does not share rewards generated from the business with minority shareholders. Can you think of an example? Anyone who can think of an example?
Dividends.
Yeah, the company doesn't give out dividends, has a lot of cash. How many times have we seen Bajaj do it? Have we seen that? A lot of companies tend to do it. Bajaj is one example. The chance that management, I'm talking about Bajaj Auto, I believe. The chance that management benefits unfairly at the expense of minority shareholder. ये तो बहुत easy है, बताओ भाई, Mr. Malia, right? The chance that management makes terrible acquisitions or mergers.
Tata Motors, I think.
Ah, Tata Motors acquisition of Jaguar.
Yes, I think they paid a higher value
Don't
for.
worry, it's not Tata Motor, it is Tata Steel acquiring
Okay,
Chorus.
it's Tata's product.
And we still worship a man who says, I make decisions first and then I think about it. The man who did that is a Indian legend who is worshipped across the country for being a businessman. You know what he says? I take decisions first and then I make it right. Now think of it as an investor and tell me how much you can respect that. Can you? Yes or no? Exactly. The chance that active shareholders make life of business miserable. For example, the group of active shareholders have an interest in developing a land. This is a hypothetical scenario, and they want the company to shut down business so that they can take away the land and make disproportionate money out of it at the expense of other minority shareholders who are not related to that area. Okay. The chance that a competitor wipes off a company's business. Any example that you can think of?
I think Big Bazaar was wiped out.
Yeah, absolutely. The chance that Big Bazaar is the greatest example. The chance that a company is unable to pay off its borrowing, go go visit any bankrupt company and you will find it. Okay, there is there are there's a long list of all that, and I have people I know who are very smart and bet only on companies that are highly leveraged. You know what's their logic? Boss, if it turns around, no, I'll make huge money. Why? Because I'm smart. Boss, you are smart, but your smartness is not going to lead anywhere, right? Because the fellow who is running the show is not going to come and ask you, boss, sir, smart, please help me. Even if you go, he's going to kick you out, right? Okay, guys. What are the categories of risks? Okay, so you have to look at what are the categories of risks. So there are operational risks, there are business risks, there are risks of unknown. So you have to figure out what what all variables are impacting the business and figure out the risk. Are we in the business of risk management or reward management? Again, you have the answer, so that's okay. Any questions still here, guys? Any questions still here? Yes, Anand.
Uh, how can we know whether we have assessed all the parameters in order to, I mean, is there some kind of a high level framework or a formula that tells, okay, now that I have analyzed enough risk parameters, I can make my decision? Like, when is the point of making that decision?
Once you have
Uh,
66% of the information, you should make a decision.
okay,
Or
66.
70% of the information, you should make a decision. If you wait for 100% of the information, you will be caught sucking your thumb. And trust me, no matter how good an analyst you are, no matter which framework you use, whether you pay a billion, trillion, or quadrillion to an analyst who's amazing, you will still leave something that you are not aware of. So don't try to do and measure everything. Try to measure what impacts the business 80 to 90% of. uh, I mean, if we were to take the business outcome as the dependent variable and your independent variables as the key variables that are impacting the business, as long as you've figured out 80 to 90% of the independent variables, I mean, put together, the weightage is 80 to 90% that impacts the outcome. You've done your job. You will never be able to get to 100%. People who wait till 100% don't go anywhere in life. People who do it less than that or would not pay attention to this kind of thinking, again, have a problem. So, are you all aware of algebra or linear equations uh, or equations for that matter? You'll all be able to
Yes.
follow if I say talk in terms of equations, right? If we say y is the dependent variable, do you understand dependent variable, independent variable? Yes, no? Anyone? Dependent, independent variables समझते हो? Y is equal to mx plus c, which is the dependent variable, which is the independent variable. Anyone who can tell me? Y is equal to mx plus c is the equation of a line, straight line, where m is the slope and c is the constant. Anyone remembers?
I don't remember, but I think y should be the dependent on
Exactly.
m and c.
Y is the dependent variable, x is the independent variable. Why? Because the value of x determines the value of y. Do you understand this?
Yes, yes.
Let's make it simple. Okay. For example, you have to walk 10 kilometers. Okay. So your walking 10 kilometers is the outcome or the dependent variable. To walk 10 kilometers, what are the independent variables that you should have? One, you should have eaten properly. Two, you should have had water properly, and you should have water while you're walking. So you should carry a bottle. Three, the weather has to be supportive, right? Four, the road has to be decent. Five, it should be relatively free for you to walk. You should be able to walk, and there should not be any pitfalls or so basically the traffic has to be less. Let's say these are the five variables that impact the outcome of you walking 10 kilometers. Okay. Now, if traffic is somewhat more, how much of an impact it will have on the completion of the outcome? More or less, compared to if you have not eaten anything in the morning. Which one is more important as a variable for you to complete 10 kilometers walk? Whether you have had food or not, or whether there is a lot of traffic.
I think food is more dependent.
Exactly. So you give more weightage to the first variable. Now, if you have not had any water, you had a lot of food, the traffic is less. Do you think you will be able to complete a 10-kilometer walk? Less likely,
Yeah.
right? So that is another key variable. Traffic is important, but it is the least important variable, right? Weather is important, but it is probably the third most important variable or the fourth most important variable. If the path is full of crocodiles, will you be able to walk? So that is also an important variable. So you got to assess which variable has how much weightage. Okay. And if you have figured out that, with the variables that I have, if all things are okay, 80 to 90% of the outcome is plausible or possible, you should go ahead and say that, okay, I've done a decent job. You'll never do a perfect job. Perfection is a fallacy. You never become perfect in life. All the people who worry too much about perfection go nowhere in life. Would you agree to that? Look at all your classmates who were perfectionists or who still are crazy about perfection. Have they gone anywhere in life? If I waited for my book to be picture perfect, I would have died and the book would not be ready. I have to dish out whatever is okay, acceptable, and 90% ready, or I think it is 75-80% ready. I can't dish it out when it is 50% ready. I I can't wait for 100% because 100% doesn't come. Even when I die, there will be something, somebody will tell me that, you could have done this, you could have done that, right? Make sense to all of you? Himadri, does that answer your question?
Yeah. Yeah.
Fair enough. Okay. No other questions on what we discussed till now? Okay. I assume that is a no. Let's get into business analysis. Which type of business has more number of variables impacting its value? Secular business or cyclical business? Please type in your answers. I'll just come back in a minute. You can take a quick break as well. Just type one or two. Okay, guys. So yes, you're right. More number of variables impact a cyclical business. I hope all of you are back. Just type a yes if you are. I'll wait for. for- Okay, great. Thank you. Cool. We'll wait for Shrikant to come back and then we'll start. In the meantime, you can look at the next question. Okay, great. Thank you, Shrikant. Which type of business has more number of variables impacting its value, commodity or differentiated? Please answer one or two. What about others? Okay.
Differentiated means any apart from
Differentiated means unique. Commodity means that's available anywhere. That's common. For example, okay. So what I mean to say is commodity business would be a business where you are farming wheat, which millions of farmers across India are farming. Differentiated would be you making something unique or you doing something unique. You taking, you producing a particular brand of atta that is uniquely identified, or you making a particular brand of biscuit that is uniquely identified, or you running a hotel that has unique uh, sort of following and is considered respected for its uniqueness. Anyone who would like to change their answer? So running a commodity shrimp business without a brand is commodity business. Whereas you running a restaurant that makes a certain special recipe of shrimp that nobody in the uh, whole neighborhood makes, and everybody comes to you for that very recipe is differentiated. Anybody who would like to change their answer? So more number of variables actually impact a commodity business than a differentiated business. A differentiated business has some part of it, mostly the demand side of it, that is assured or more likely or more predictable. Whereas commodity business, both sides, demand and supply, both sides are open to vagaries. So it's the commodity business that is impacted by more variables. Does that make sense to you, Himadri and Pranay?
Yeah, yeah. So because in differentiated, you're saying like at least some part you can control,
Because
but
you
in
can,
commodity,
you tell me where you can control more when you are procuring shrimp and exporting shrimp, or where you are known in the town for making a special recipe of shrimp, which only you can make and you are known for that.
yeah, I think you can control more here
Right.
because you can only maybe just find your strategies to increase the sales or something, which is easy at least. But in other
Right.
place, even though you try to increase the sales, there might be something else that might affect. You can do good marketing and try to improve sales, but maybe there is not enough things available, or you're not able. So there are other factors that can impact your business. Yeah.
Right. Pranay, what about you?
Yeah, I got it now. So the differentiated business is controllable, whereas the commodity business is not controllable.
Correct. Or differentiated business has its unique proposition that allows it the control. Commodity business is a run of the mill, no control. See, commodity is like making cotton that everybody is making or producing cotton. Okay. But differentiated is you making a special shirt that is branded, a brand, Alan Solly, or something like that. Okay. Which type of business has more number of variables impacting it? Margin business or volume business? Anybody would like to take a shot?
As more number of variables, I think the volume, but both are actually interrelated.
No, they are
Uh,
interrelated. That's okay. What I mean by volume businesses, which where the major driver is volume, and margin businesses where the major driver is margin.
It
yeah,
will be
I would
volume.
consider volume.
Actually, it depends. Okay, so it depends which business. So a high margin. So I thought of volume as well, but now when I'm rethinking about it, it actually depends. High margin businesses like mining can be more impacted than volume businesses, but yes, in general, volume businesses have more number of variables impacting it if we leave the idiosyncratic parts or unique sort of things. Okay, generally volume businesses are have more variables impacting it. So now you get a sense of how variables impact different types of businesses, right? That's what is important, and good you got it. So in business analysis, we are going to cover these four questions. The first is, can I explain the business to a 10-year-old kid? Don't try to give me poems. Don't try to tell me long process. Within, if you are explaining it to to a 10-year-old kid, you have to say it within a couple of lines. Do you agree to that or not?
Yes.
Right? What are the key offerings of the business? What categories it is present in? What is its offering? Is it a service or a product? Is it a want or a need? It is a luxury or a need? Which geographies does it sell its products or services in? If it is a B2B business, what is the end user customer industry? And in the end user customer industry, how is the demand like? Whether this product is considered to be a painkiller sort of product which solves a problem immediately, or a need sort of a product which is required perpetually, or something that is needed to improve the efficiency. You need to understand the key offering in a very holistic manner. Okay. The third is, does the business have a consistent operating history? It does not mean that the company has existed or not, but whether the business has evolved from scratch and how has it evolved. You should know the story. Okay. Why should you know the story? Because evolution tells you what kind of choices the business owners have made to grow the business. Fourth is, does the business have favorable long-term prospects? That's a subject in itself. Okay. These are the four questions that we are going to ask. So when we talk about offerings, this is how we look at product nature. The slide is really important. It is part of one of the uh, articles that I've shared on LinkedIn, which I asked you to read. Okay. So is the product a B2B product or a B2C product? Is it a need or a want? Is is it cyclical in nature or secular in nature? What is the buying behavior like? Is it mind share driven, performance driven, value addition driven, or is it because the customers are buying simply because it is available under the seller as the cheapest product? How is the long term demand and supply scenario like? Whether the product has a recurring demand or one off demand. Okay. What do I mean by B2B or B2C? B2B is where you are supplying to businesses, whereas B2C are brands, consumer brands, or consumer oriented products. What do I mean by need or want? A need is like food, whereas a want is like a watch, a luxury watch, or a want is like a goggles, a luxury goggles, something of that sort. You know the difference between secular businesses and cyclical businesses. Do you? Yes or no?
Yes.
Okay. The buying behavior, is it mind share driven? When I say mind share, is it about brand oriented, or is it because this thing is going to improve my performance? For example, engine oil, or is it a value addition? For example, Maggi masala, it adds flavor to your sabzi, right? Or is it because it is the cheapest? When you're buying acid, do you look at brand or do you look at the cheapest price to clean the floor? Usually people buy the cheapest one, but yeah, Harpic has been successful in making a brand there as well. Okay. So that's the difference. Long-term demand versus supply. Where do you think long-term demand supply scenario is more favorable? Is it in the business of milk or in the business of cotton?
Milk.
Okay. Why? Because milk, the demand is perpetually rising, whereas the supply is not keeping pace at the rate at which demand is rising. Correct. Hiral, Pranay, you agree with that?
Yes, yes.
Hiral, I hope you agree. Oh, Hiral left. Okay. Any other commodity where long-term demand and supply is in favor of the is in favor of the product? Okay, Hiral, you agree with that? I'll assume that as a yes. Okay, recurring demand or one-off demand. So, do you need furnitures on a daily basis or toothpaste on a daily basis?
Yeah. Obviously, toothpaste.
Yeah, you don't buy furnitures on a daily basis. No problem.
Yeah.
Cool.
Recurring demand.
So, recurring demand is one of the greatest secrets in investing. Recurring revenue. Okay. Do you have this framework set in your head now? Do you understand the variables? You can set it, you can take your time. I'll share the presentation, you can set it in your head. Do you understand this?
Yes, sir. Shreya, also in case of this, the
Mhm.
customer also matters. Just like if it's an government business.
That is exactly why I said B2B or
Yeah,
B2C. Yeah.
yeah,
So B2B, if your customer is government, you better be careful.
yeah.
I thought don't even look at those businesses. Okay. So I have not mentioned it hence, but yes, if you want to make that categorization, if you are looking at them, then you should. I outright reject anyone who is selling to predominantly the government. They are twisted folks. You don't get there by doing things straight. Okay. Does the business have favorable long-term prospects? What are the questions that we covered till now? So for operating history, how will you go about and find the operating history, guys, of a business? Pranay, you sent me recently a video on Mrs. Rajni Bector,
Yes.
right?
Yes.
That
Yes.
is exactly her story of operating history. So you need to find the entrepreneur's biography. How did he do? Where did he come from? Where did he get the money from? How much struggle he had? How many times he was raided? Whether he was rated or not, all that you need to ask. Okay. Okay. So does the business have favorable long-term prospects? Hiral, I think we are clear about this. Are we? Srikanth, Hiral, Himadri, we are clear, right?
Yes.
Operating history. Cool. Okay. Coming to the most important question. In the whole curriculum, this is the most important part that you need to understand. Does the business have favorable long-term prospects or not? No matter how rosy the business looks today, does it have favorable long-term prospects or not? Why? What kind of a business is this? Is this a volume business, margin business? Is this a cyclical business, secular business? Is this a commodity business, differentiated business? Usually high margin, secular and differentiated business go together. Okay. And high volume commodity and uh, cyclical business go together, but there can be permutation and combinations. Okay. Usually that happens. So you got to understand what kind of a business is this. You have to make your own mental map. How is the competitive landscape in the industry? In the how does the competitive landscape in the industry look like? How are the demand and supply economics of the business for its key offering and key resources? So I'm not just talking about key offerings, but key raw material also. You need to understand the demand and supply long-term scenario. Okay. If it's wheat as raw material, you got to understand that. If it is biscuit as output, you got to understand that. If it is raw milk as input, you got to understand that. If it is milk, curd, ice cream, dahi, paneer, you got to understand the demand and supply scenario of those. Are we getting this, guys? See, I'm not giving you the right answers. These are questions that you need to ask. Okay. That's how you think about business. See, margin driven, volume driven, both driven by both asset heavy, asset light, higher or lower recurring capex. That's another categorization. Okay. Driven by both. Which business is driven by both margin and volume? QSR, right? One example. Asset heavy or asset light. Asset heavy would be a steel industry and asset light would be an IT industry, right? And even a biscuit company that is outsourcing its manufacturing would be an asset light company. Higher or lower recurring capex? See, recurring capex is really important, right? We discussed about recurring capex in calculating owner's earning. Remember? अब कोई बोला ना नहीं remember तो बहुत दिक्कत होगी.
Yes.
Guys, remember, right?
Yes.
Great. Hiral, Srikant, Himadri, I hope you remember.
Yeah. Yeah.
Okay. Ideally, you should always look for businesses that have low recurring capex. Okay. The next set of questions are: what is the competitive advantage or moat of the business? Okay. Is the moat expanding or shrinking? Oh, sorry, is the industry expanding or shrinking? What are the growth prospects of the industry? So is a pen industry expanding or shrinking? Writing pens.
Shrinking.
Shrinking, right? Is the smartphone industries expanding or shrinking?
Expanding.
Right. That's how. What are the growth prospects? What are the growth drivers that you need to understand? What are the tailwinds and headwinds the company is in the industry likely to face? Sorry. Uh, yeah, to experience going forward. You should understand that, and you should think about all this in a 10 to 15-year time frame at least, if not more. If you think really long term, you will be able to see things that most people can't see. It's no magic that some people can see farther because they are looking for something farther. Some people who are looking only for tomorrow, they won't see anything 10 years from now, right? Only if you look, you will see. So you got to look. That's the most important part. Think long term. How long? 10 to 15 years at least. If you're thinking longer than that, kudos to you. You should. But you have to draw a line somewhere. Yes, Pranay, you want to ask something?
No,
Yes. What? Okay. Quiz. What kind of an industry is more likely to have predictable long-term prospects? Which kind of an industry is likely to have predictable long-term prospects? Industries that are undergoing rapid innovation, okay, or industries that are changing very less over a period in time. Thank you, Shrikant, for the answer. What about you? Rest of you.
the second one, I think.
All of us agree second.
Yes.
Why the hell do we run after the next best innovation, the next AI or Gen Z or blah blah? That's all good for R&D lab, not for investing. Okay, don't confuse the two. You will fall flat on your face if you confuse the two. What is good for one is not good for another. Sorry for being blunt. Okay, coming to favorable long-term prospects. Now it gets a little more interesting. Does the business have favorable long-term prospects? Here, how do you go about analyzing this? So you look at 5 variables in business structure: bargaining power of customer, bargaining power of supplier, competitive intensity among incumbents. Incumbents का मतलब होता है existing players, barrier to entry, and threat of substitute. In competitive intensity, you look at nature of the product, number of players, and their relative sizes. Moat, barrier to entry, also you look at moat. So moat are of the following types: brand, intellectual property, regulation, network effect, lowest cost producer, and switching cost. Okay, we'll understand each one in detail. You guys have another extra 15 minutes in your hand after 9, because this will be intense and it will be interesting. Yes or no?
Yes.
Srikanth, you have. Okay, cool. Thank you. Here is, see, I could have explained you bargaining power with words, but I thought I'll bring an elephant in. So when three people are pulling on each side, it's more like a matched concept. I mean, matched contest. But when an elephant is pulling from one side and a human is pulling from one side, you know who has more bargaining power. Who has more bargaining power? It's obvious, right? Elephant has more bargaining power. Elephant खींचेगा तो इंसान नहीं टिकेगा, right? So when I say bargaining power, I need you to think of the second image in your head. A favorable bargaining power looks like this, and an unfavorable bargaining power also looks like this. Okay. In one case, it is in your favor. In one case, the elephant is opposite to you. In one case, the elephant is pulling for you, and in the other case, the elephant is pulling against you. Okay. Do we understand this? Only a thumbs up
Yes,
would
yes.
do. Thank you, guys. See, bargaining power of customers. Earlier in the Indian telecom space, we had so many telecom companies that mushroomed up. Who had the bargaining power? Who was the elephant back then before 2020? Was it the companies or the customer?
Companies.
Companies. Macha.
Well, right?
Macha. No, it was consumers. When too many people fight for the same pizza, who do you think is going to win? Sorry. When too many companies fight for the same customer, who do you think is going to win?
Customer.
The customer, right?
Yes.
In the current situation, who do you think has more power? Who has the elephant? The customer or the companies?
Now I think companies.
You would say, boss, कितनी कंपनीज थी और अब 4 बची है, जिसमें से एक तो डिसफंक्शनल है. बीएसएनएल का फोन कौन कौन यूज करता है भाई? So bargaining power is completely in the favor of companies. Have you realized the pinch of your telecom bills going higher in the last couple of years, or since COVID, since the data consumption peaked up?
Yes. The average ARP, what we call, it's increasing
Yeah.
from 150 to 170, 180.
छोड़ यार, ARPU छोड़. You tell me whether your pocket is being snatched or not.
Yes.
Earlier you were snatching their pocket, now they are snatching your pocket. Okay, so that's bargaining power of customer. So now it is favorable for companies. So relatively, you can say telecom players who have survived are better off than they were earlier in this aspect, right? Okay. Bargaining power of suppliers. How many airlines do we have across the globe? These are few names. I I don't think Indigo यहाँ पे है, but our Indigos and bloody Vistara and everybody is also there. I've not had those names here. And who are the suppliers? So who do you think has the elephant? The suppliers of airline or airline parts or the airlines? Suppliers. Okay. What do you think? Rest of you? Quick, guys.
Yeah, I think this is obvious. The Boeing and
Oh, this is obvious, but everybody has to say it. Pranay?
Yes. This, airline companies, Boeing and all.
Airline companies. It is suppliers, right? दो सप्लायर अगर एयरलाइन और एयरलाइन के पार्ट सप्लाई करेंगे तो वो मनचाहा दाम नहीं लेंगे. लेंगे, right? If you had a chance to be considering all else equal, would you want to be an airline or an airline supplier? I would be an airline supplier, right? And if I had a chance, having all else equal, if I were in the telecom business, would I want to be the customer or the company? I would want to be the company. Elephant जिसके पास वो राजा, right? I hope you.
Yes.
Okay. Threat of substitute. I could not find a better image. My favorite cartoon. So when Tom got a competition from a robot, Tom was kicked out of his job. So, so that's substitution for you. I thought of explaining with pictures. So For petrol cars, the substitute is electric cars or hydrogen powered vehicles or renewable powered vehicles. Okay. You got to understand what is the threat of substitute in your industry. Is there a threat of substitute in the milk industry?
No.
Yes, there is. Why?
Milk powder.
Bloody people are turning vegan. It's not practical. That's a separate thing. It's impractical, but yeah, it's there. There is an outside chance. Okay. Is there a substitute for cement yet?
No.
No. Is there a substitute for red bricks that are
Yes.
used for construction in India? Yes, there are. Correct. So you go to ask, and whenever someone tells you comes to your place to get married to one of your niece or nephews, and they say, we own the largest bloody, what do you say, brick business, red brick business. Would you want to get your relative married to that guy? Yes or no? The threat of substitute, the degree of threat of substitute should determine that, right? Now you would say, no, 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 the guy is good, so I'll get him married. Asking from a business standpoint, what would you do? Would you say yes or no? Just if you were looking at business. No, right? Correct. You have the cards with you, so you should play it to your advantage. Competitive intensity. Having the whole pizza and having a bunch of friends taking away your pizza. That is competitive intensity. Okay. The whole pizza is the profit pool. And too many competitors kind of lessen the profit pool. How was the competitive intensity in the 90s? Limca, Gold Spot, Citra, Club Soda, Maza, Thumbs Up. From there, we got to soft drink of Pepsi and Coca-Cola. And now, how is the competitive intensity? Has it increased or decreased in the over the whole period? In the soft drink
Increased.
industry, has it increased or decreased? It has increased, right? So increased competition is good for business or not?
No.
Especially when the competition happens on the basis of price, it is the worst kind of competition. You if you are in a business where undercutting of prices is the only modus operandi, it is time to pack up. Himadri,
Right.
you connect to what I'm saying, right?
Yep. Yep.
Cool. Barriers to entry or moat. I could not get a better picture. This is a moat. You add some sharks and crocodiles to it, it becomes even more amazing. Okay, types of moat we discussed. I have further consolidated it. Brand is mind share, lowest cost operator is economies of scale or scope, which is producing something
So,
at the lowest cost. Yeah.
the previous example, like I think I maybe discussed, but are there like real life examples of this?
Of
Like
this,
not this, the next one, the
oh, the
barriers
moat,
of yeah,
boss,
the
every
barriers.
Yeah,
single,
we have.
sorry.
Everybody thinks it's every. I mean, oh, so you're saying just a moat?
See,
Because I was reading.
every
Hmm,
successful business or every successful castle has had a moat.
okay.
Be it Apple, Microsoft, Coca-Cola. Shrikant, you were saying something. Sorry.
Yes, that is the main thing what we need to identify. So what is the moat? Then and then
Exactly.
and we need to identify the businesses which has a moat. That is, I think, the next slide is tells
You
what
should
type of
not
business.
analyze anything that does not have a moat. You'll waste your time if you're doing that.
Right.
So brand is mind share, occupying a space in your head. I'll exemplify it. Lowest cost operator is nothing but any business that operates at such a scale or scope, has scale or scope advantage, which reduces the cost of production to an extent that it allows it to sell at a price where if anybody sold, they would go bankrupt. The lowest cost operator usually in a business can sell at a price lower than any competitor can even produce. Okay. For example, if you are a DMart, if you take a DMart and a Kirana store, the price at which DMart can sell, the Kirana store cannot procure. Do you agree to this?
Yes.
Yes.
Right. Intellectual property protection, patent, license, or copyright of a book, patent of a drug, license to open a bar, or lease to open a mines, or license to sell liquor, license to run a bank. Network effect is the most amazing sort of mode that we can discuss, and we won't have the time to complete that. I would suggest you to read a book called Mismatched to learn more about network effects. Yeah, Twitter, Facebook, Instagram, LinkedIn, for that matter, OTT platforms, YouTube are having network effects. What do I mean by network effect? You are there because there are more creators there. The creators are there because more audience is there. As you add creators, more audience will come. More audience comes, more creators come. It's a chicken and egg situation which keeps growing. Switching cost. Switching cost is like you being used to certain thing. Like an Apple user, if you give them an Android phone, they're going to get irritated about it, right? So uh, similarly, you you give a Macintosh user a Windows system to operate, they'll get irritated about it. Okay, so those are examples, and here are more examples. Brand or mind share. There was this big campaign that um, Coca-Cola and Pepsi had fought about. Pepsi said Happy Halloween by putting a Coca-Cola kind of a robe on Pepsi, and Coca-Cola said, no problem, everybody wants to be a superhero. So you buy cola not because it's the loveliest drink. You don't buy Campa Cola, you buy Coca-Cola or you buy Thumbs Up simply because it commands a mind share in your head. Similarly, when you think of bikes, the run-of-the-mill bikes, you first think of which brand do you think of in bikes? When you think of bikes, you are a middle class person who does not have, who's looking for efficiency. Which bike will you think of? Which bike brand will you think of in India? Quick guys.
Hero or Bajaj?
Okay, Hero Honda. It is actually Hero. Honda, you were coming from a global perspective, so you were saying Honda, but Hero is what people usually think of. Bajaj is catching up quickly. When you think of having noodles in India, what do you think of?
Maggie.
Maggi, right? When you think of having coffee in India, which coffee do you think of?
Yes.
Nescafe?
Yes.
When you think of baby food, can you think of anything other than Cerelac? Unlikely. When you think of buying an efficient car, which company do you think of?
Maruti.
Exactly. That's mind share. Not not to say that Pepsi is not good or TVS is not good. They're catching up. Or Yuppie is not good. Or Ching's is not good. Or Brew is not good. Or Tata Coffee is not good. Or any other baby food is not good or Hyundai is not good, but you have a certain perception that has been built in your head, right? If I give you an example, you will be surprised if you ask people, uh, what's the market share of Titan? Tell me what's the market share of Titan. Don't Google. Tell me the number that comes top of your head. Titan watches in India.
25 to 30.
Yeah. What about others? Okay.
I don't know, more than 50.
Okay. It's 18%. It could have increased to 20, 25%. But your mind share is 50, 60%. So it has more potential to go. You see, that's mind share for you. Lowest cost operator. Steel is a business where fixed costs are high, and hence the market share is consolidated 20 plus 18, 38 plus 16, 44, 54, 54 plus 8, 62, 62 plus 7, 69. 69% of the steel is made by the top five players. Okay. So, and of that, Tata Steel is the largest, and JSW Steel is fast catching up. Since it has the largest scale, largest plants, Jamshedpur alone has a 10 million ton plant. I know it's not very big when you compare it with China, but it is big in India. Okay. And hence, at that scale, they can control a lot of fixed costs. Like when you run a large retail shop, you can bring your operating cost down. They can also bring that down. Similarly, in passenger vehicles, Maruti Suzuki commands the largest market share of 41.4%, and that allows them to produce at scale and control operating cost. Similarly, in milk, there are so many milk brands. Amul is the largest. In private dairies, Hatson is the largest. That allows them to control a lot of costs because they are running things at a huge scale. Okay. Now, why did I put milk here? Simply because milk does not only have economies of scale but economies of scope as well. Because you milk is one product that can be converted into buttermilk, curd, ghee, khoa, cheese, paneer, name it, right? And that gives it economies of scope and leverage to sell it at a higher cost by converting it. And ice cream for sure, that's the highest one. Do you get? The other two examples are more to do with scale. The third one is to do with scale and scope. Do you understand scope, guys? Yes, no? Okay.
Yes.
दिमाग चल रहा है अब? This is the most interesting part where you need to correlate numbers now. सबका दिमाग चल रहा है, guys? You are enjoying this? I hope you are. Okay, intellectual property. Now I put the mining lease in intellectual property. Sorry about it, but yeah, the categorization is lease, license sort of things. Then there is patent, copyright. Okay, uh, so those examples, they are outright and you know about it. So network effect is to do with social media, OTT platforms. Switching cost we discussed. Another great switching cost is bank. How painful it is to change your bank as a account holder.
Yeah, very tough. Especially the history you want to maintain is the biggest challenge. You
Exactly.
cannot switch the history.
Exactly. And that is why they milk you in between. कभी क्रेडिट कार्ड का चार्ज, कभी डेबिट कार्ड का चार्ज, कभी किसी का चार्ज, कभी कुछ का चार्ज, and you keep fighting and they're like, okay, okay, it'll happen, right? They play this game, right? Private banks especially.
Yeah.
In India they do. Okay, fair enough. So it's not huge, but yeah, they play this game. Now, do you think a good business, sorry, before we come here, do you think a good business has any one of these modes or a combination of these modes? What do you
one
think,
business.
guys?
It's a combination, but even out of the combination, I think moat has to be something. One has the highest factor.
Right. Exactly. Again, you need to think in terms of equation. Hiral, Pranay, do you agree with what we are talking?
Yes, yes.
Okay, cool. Thank you, guys. Now, what you need to do, food for thought, is how do each of these modes look like in numbers? Each mode will look differently in numbers. Each factor will show up in numbers. Now that you have processed all the numbers, I would want you to go back and look at least three companies and at max five companies, not more than that, and come up with relation between modes and numbers and the variables that we talked about: bargaining power of customer, supplier, competitive intensity. Where can we see that? Make your own list, will you? It's an observation exercise. Now you have all the data, you have all the mental framework, you will have the PPT, you have to do the groundwork now. Okay guys, homework के लिए ना नहीं बोलते. Sorry, it's not homework, it is okay. Hiral, ऐसा नहीं बोलते. Just 3 to 5 companies. You do for 3 companies and you will do it for the rest of your companies on your own. I've tickled you enough to go in and uh, tickled your interest enough to go in and explore. Okay, so please look at 3 companies. That will be really helpful. Himadri, Pranay, both of you as well.
Yeah. Okay.
Okay. Okay, same question. So we are done with this. Thank you. Any questions, anyone? Feel free to ask.
Yeah, very interesting session. I think it changes a lot of perspective to, especially the business analysis, what things need to put in. Even the risk factor, I think, was definitely good eye opener to rethink on how to assess things.
Okay, thank you. Thank you for that. And it will become really effective when you actually put it together with numbers. You will become lethal as an analyst over a period in time. You tell
Yes.
me how many of you used to look at numbers this way? And now that you have numbers and analysis construct, do you think when you combine together, you will find something unique?
Yeah, I think maybe it will start making sense to sometimes like things are not explainable, but when you try to compare now, I think maybe things will become more logical and make sense.
What about you, Pranay, Hiral? What do you think, guys?
Yes, yes. It will make really sense from numbers to now. Uh, can create stories from this now. We can relate now.
Okay. What percentage of what we did today you used to apply already? This question is for Pranay and Shrikant.
I think I just previously I just used to find businesses uh, just if it's an unique business, but didn't find the bargaining power of all those things. I didn't used to find the modes part. Basically, it was missing. Now I'll add into this, so this will be really interesting in the journey now. I think.
Good. So it's value additive for all of you, right?
Yeah, yeah.
Okay. Shrikant, what about you?
No, coming to modes, I'm already aware about the concept and all the things. But now I think the one thing missing is the numbers, matching with the numbers. For me also, I've not done much, which is interesting for me as well.
So please go ahead and do it, guys. Hiral, would you want to speak? Ah, this is Michael Porter's five forces analysis. Yes, it is Michael Porter's five forces analysis. I'd not put it together because I did not say that because the moment you hear Michael Porter five forces analysis, a lot of people tend to get like, oh, yes, standard hai. See, it is holistic is what matters. Good. Now you will apply it. Application is important. Okay. Fair enough. Thank you, guys. Thank you.